as this gentleman 2 weeks ago was giving me a demo of the platform, I remembered which capabilities were especially compelling to the buyer a few years ago. And so I was asking this gentleman, okay, well, can the platform do this? Can it do this? Can it do this? Can it do this? And I realized that in a couple of months, essentially by himself with the help of AI tools, this guy had built a platform which was probably 80% complete compared to what our clients a few years ago had spent thousands of person hours, millions of dollars building.
Welcome back to another video where I'm interviewing the investment bankers from the North American region and sharing their experience with all of you. So today we are joined by Mr. Michael Bolotin, who is a partner at TechStrat, a technology-focused M&A advisory firm based out of the US. He works very closely with the software and tech-enabled companies, guiding them through the entire transaction process from buyer outreach and negotiations to successful deal execution. Welcome to the show, Michael.
Thank you, Narayana. And I'm happy to be here. Thanks for reaching out. We're big fans of Tracxn. And for context, we are a kind of boutique investment bank. So we focus almost exclusively on sell-side transactions, M&A transactions with software or tech-enabled services firms. Our clients are in the lower middle market. They usually have somewhere between 3 million US revenue to up to about 50 million. And they approach us when they've decided that they would like to seek a change in control, most often because they have built the company, validated product and market fit, commercialized the products or the solutions that they're selling, and realized that faced with a number of big growth opportunities ahead of them, it would make the most sense for management and shareholders to partner with either a strategic acquirer or a financial sponsor to help fuel the next chapter of growth. So we don't really get involved in any minority capital raises. We don't do any debt placements. We live and breathe tech M&A. Thanks again for having me.
Yeah, that's great, Michael. So to start off with, I would like to understand your background, your journey so far, and how you are into the investment banking world.
Thanks. I'd say my background is somewhat conventional, although there are a couple of kind of key moments in my career that have brought me to where I am today. I'd say that above all, I'm fortunate to have some very helpful and kind of meaningful mentors in my career that have helped guide me and as I was considering different career moves and whatnot. My background, I studied finance for my undergraduate degree in the US at a state school called Washington State University. But while there, I met a professor that was a professor of marketing who was very excitable and got me interested in all things marketing and market research related. So following some market research projects during my undergraduate degree, once I graduated, I interned for a couple of entrepreneurship organizations, namely the Founder Institute in Seattle, and then joined a market research firm, Penn Schoen Berlin, which was part of the WPP family. And work there advising big tech companies on some of their product marketing and brand marketing initiatives. I then became a little bit more interested in kind of the business side of things, and so joined a consulting group called Sageti. It's part of the Capgemini family, which brought me in a little bit deeper into the Microsoft organization, where again I was continuing to advise on both growth-oriented initiatives in addition to some of the cost optimization exercises that consultants do as well. And after working tactically I realized that I wanted to do two things. I wanted to learn more about the strategy, kind of the why behind certain business decisions, and I wanted to position myself to live and work abroad. And I had heard, again, talking with some mentors and some folks that were more senior than me and kind of in my professional circle, I learned that a business school was a good opportunity to achieve both of those goals, to again learn more about the business strategy behind certain decisions, and also to position myself for potential geographic change or kind of an industry change. Recognizing that I wanted to live and work abroad, and specifically in Europe, I applied into a few European business schools, and I was very fortunate to be accepted by IE Business School in Spain, where I spent a glorious year in Madrid, and then about a half year in Milan in Italy as a kind of a postgraduate exchange student. And then during my time in business school, I became interested in all things kind of venture capital, investment banking, and private equity related, which for some reason I always found kind of the transactional side of things very compelling. And I like that they take a high level view of the business, and kind of you learn in the ins and outs of each business as you consider investing or selling or buying one of these. Following my time in business school, I then accepted an internship in Israel working with a small venture fund. And when I finished that tour, I came back stateside, recognizing that number one, in Europe, countries do control the flow of labor across their borders, and without working papers in Europe, I was advised to find a big company to work for in the US that could then take me back out internationally. But again, recognizing my interest in all things VC, IB, PE, I decided to concentrate my recruiting efforts on those types of companies in the US. And through the local Seattle network, through some personal connections, I came in contact with Nat Burgess, who was a very seasoned senior investment banker. He had started his career with Morgan Stanley in the late 80s and had got his law degree at UCLA, and then worked for the SEC, and had participated in a couple of enterprise tech companies and startup companies, and then eventually made his way back into investment banking, where he led Quorum Group for a number of years, and had then just started TechStrat in 2016, about a year before he and I connected. And as a young, hungry postgraduate MBA, I was focused very much on learning. Fortunately, Nat had a couple of deals that he was working on where he could use some help. I helped him out on those, so we found that we really enjoyed working together. And I also found that the type of investment banking work really suited my interests and my personality, specifically that blend of what I would affectionately call the nerdy at desk research work, the quantitative and qualitative side of things, of learning about a business, learning about its market, kind of identifying and validating its growth opportunities, with the away from desk, more kind of personal and social side of the business, where there's an element of salesmanship, there's an element where you're out there pitching prospective clients or pitching prospective buyers, and really trying to push a deal ahead, because you can't just assume that a deal will get done simply on the business fundamentals. And so I've been with the firm now for a little over 8 years. I still hop out of bed every morning excited to go to work, and I'm very, very fortunate that Nat and our team have been like a kind of a professional family for me, where we still enjoy working together, and we've been able to, because we're so focused on tech M&A, and we have a relatively small team, we're fairly selective with the types of clients that we take on, and so we're able to continue working with the clients that we're really excited to work with, and that always is helpful. And I think the other thing too that I find especially meaningful about the role, about my role in investment banking today, is that we're working with relatively small clients, such that almost all of our clients are founder owned, and I find myself feeling especially motivated to deliver a great outcome for our clients because I'm working with the founders, the guys and gals who have invested years, time, blood and sweat and kind of and tears into building their businesses. And I find that it's especially rewarding when we can deliver a successful deal close.
Yeah. That's great, Michael. That's a great journey what you are having. So in the last 8 years, I'm sure that you might have done so many deals. So is there any special deals, like something which stands out in your mind?
Yes, there's one actually. I pick a recent example from last year. There was a company called Cognits, which is a Guatemalan digital transformation services company. It specialized in outsourced software development for fintech companies and financial services companies in the US. So it was focusing its commercial efforts on the US market, but delivering services from Guatemala and from a couple of other places in Latin America. And it had reached a point where it was kind of in the mid-single digits of revenue. It was profitable. It was growing, but not super fast. And again, had started reaching this point where they were facing some big growth opportunities and thought, we could probably better capture these opportunities with the help of a bigger strategic partner or a financial sponsor. On top of that, some of the early investors and shareholders wanted a chance to liquidate some of their shares and really to position the business for growth in its next chapter. And I kind of pointed to this deal specifically because when we ran a competitive process. We reached out to many different strategic acquirers within our network globally. And that's another thing, despite our being based in the US and despite usually having majority US clients or North American clients, we do run a global search when we're running our engagements. And we ended up finding a buyer for Cognits that they had actually never heard of. It was a fantastic company called HTech, Serbian origins, really kind of a stronger European presence, but they, in the past couple of years, had really focused on making inroads in the US. They had moved a number of their leadership members over to the US and were really trying to position the US as kind of their key strategic market. And they were selling there into the enterprise, and they found that they found that a lot of their clients were then asking for some nearshore capabilities. Now, HTech being a Serbian, kind of Central European company, there are some advantages to that offshore model. But of course, listening to their clients' needs, they wanted to kind of acquire that capability. And specifically, they were looking into Latin America as a way to deliver high quality of services at a slightly lower cost basis with the labor rates in Latin America. And the timing was special, kind of serendipitous. We found HTech. We highlighted all of the synergies that we sought, especially from on the delivery side. And without kind of getting in too much detail, the process got competitive. The offer that HTech submitted was very compelling, especially because of the synergies involved. And the personal rapport between the two teams was quite strong, such that they were able to we helped them successfully close that transaction last July. And checking in with the management team now, they've just been really, really pleased with the way that HTech has kind of brought them into the organization, and they've already started to realize a lot of those synergies that I personally pitched throughout the process. So that's what kind of one of the many highlights and a recent example that I wanted to mention here.
That's the same line which you mentioned earlier, the kick which you are getting when you are working directly with the founders who have put their blood, energy, sweat, tears, everything into it.
Exactly.
That's wonderful, Michael. So following that question, I want to ask this thing, like, in your opinion, in your analysis, how is the deal making picking up right now? Like, what challenges are there in the market, which you are seeing currently in the market?
Well, I'll describe to you a surreal moment I had a couple of weeks ago. We were
Okay.
approached uh, uh, by an individual whose day job is a commercial real estate investor, um, who is a bit of a techie and likes to stay abreast of the latest technologies, and had been searching for a uh, transaction management platform, kind of a contract management platform that could help in his commercial real estate transactions. And after looking at the market, he didn't find a tool that satisfied his needs. So using AI tools, and specifically Lovable and Cloud Code, he decided to build this tool himself. It served his purposes, and he thought to himself, as any prudent entrepreneur, he thought, maybe this platform would have value to some others. Let's talk with Michael and team and see how sellable this venture would be. And it's still relatively kind of early stage, but the product capabilities were compelling. And again, the guy had coded this thing on nights and weekends, a few hours a week here and there. The surreal moment to me was that in either late 21 or 2022, we sold a very similar business, a company called Secure Docs, and they had a contract lifecycle management platform called ContractWorks. We sold that to a company called Onit, which is backed by K1 Investment Management. And as this gentleman 2 weeks ago was giving me a demo of the platform, I I remembered which capabilities were especially compelling to the buyer a few years ago. And so I was asking this gentleman, okay, well, can the platform do this? Can it do this? Can it do this? Can it do this? And I realized that in a couple of months, essentially by himself with the help of AI tools, this guy had built a platform which was probably 80% complete compared to what our clients a few years ago had spent thousands of person hours, millions of dollars building. And I walked away from this conversation with really two observations. Number one is that now in 2026, because of the powerful AI tools out there, the perceived value of pretty much any B2B SaaS business today has gone to close to zero. Because now a prospective buyer will think, why buy this thing when I can, pay somebody or use an existing member of my team to just build it with the help of AI. And maybe it won't be quite as flashy or quite as slick, but it'll probably be good enough for what our customers are asking for. The second observation was it kind of reminded me of something that has always been true and will always be true, which is that in the end, one critical element of value is customers and revenue. Despite someone today being able to build some software with using AI in minutes, if not hours, or a couple of days, the hard part has always been actually convincing a customer to pay for it and then renew their contract when it comes to time for renewal. So deal making this year is going to be interesting, to say the least. I think the early stage companies are going to have an even harder time trying to sell themselves or trying to find a buyer than they have had in the past, because again, there will still remain questions, even bigger questions around product market fit and around their ability to actually build a real business around the solution that they're selling. But those companies that have some scale, that already have customers and revenue, they will still be able to command attention. And I think they'll probably be able to command a slightly premium in valuation because of now kind of the scarcity of finding a business that does have customers and revenue and a strong product. And I think that will hold, that'll be even more true in specific verticals where someone has built a solution specifically for the needs of that subsector within an industry.
So as a follow-up question to that, what do you think would be the industries or the sectors which you are focusing in 2026, and is there any particular reasons for that?
I'd love to say that we're gonna focus on only the following things and nothing else, but in the end, we're focused on we just live and breathe M&A with software and tech-enabled services companies, but we also are open-minded enough where, as long as a business model is software-led or software-enabled, we don't really care about the end market or vertical that they're selling in, as long as it doesn't touch one of the vice industries, so to speak. Nonetheless, I think the subsectors within tech where I expect there to be some where I expect buyers to be especially active will be some of the more, call it, conservative sectors, places where AI may be started to be experimented with, but it may take a while for customers to actually trust an AI solution, especially because, talking with developers, just reading some of the market analyses, with AI, it can help people build a prototype a little bit quicker and help them even build something that's production ready. But because it can do these things so quickly, oftentimes the developer managing that AI tool's work, they have to motivate themselves extra to check the quality of that AI's work, and so that still presents some AI security risks and some risks that there will be bugs in the program. And there are a couple of subsectors within tech where, again, those bugs cannot be tolerated and those AI security risks cannot be tolerated, and that would be things like GovTech, so government technology or solution selling into the government vertical, solution selling into the healthcare industry. Those are probably kind of the top two that come to mind, and places where we're going to try to spend a little bit more time this year.
That's amazing, because like one other customer whom I spoke also mentioned about the health tech also, which is
Yes.
right now, which they are expecting to grow to the next level. So that's amazing, Michael. So I just want to ask one more question here. Like, what do you think is the impact of AI in the life of an investment banker? Like, how do you incorporate AI or any kind of data tools for your daily workflow?
Yep. So I'd say that, just for context, generally in life, I'm a bit of a laggard when it comes to tech. I'm not an early adopter. I like things to be production ready. I try not to be a beta tester. And specifically with AI tools, I have experimented with them and am using them in the following ways. But I've also our analysts do incredible work. They probably use AI a little bit more than I do to aid in kind of their efficiency. I wouldn't say it's necessarily changed their effectiveness, because they've always done fantastic work, Julie and Vladimir specifically, but they're now able to do work, argue a little bit more quickly than they did in the past, because they're using some of these AI tools. Where we're using AI as a team and specifically with some of the analyst work, market research, market sizing, competitive analyses. We are now experimenting with I'm personally experimenting with exploring how some AI agents could help us with some parts of our work, whether it's in running a marketing campaign or reaching out to prospective buyers or prospective clients. Again, I haven't kind of landed on any solid solution that I'm planning to use continuously, but the world is changing and I want to stay abreast of the latest technologies and opportunities. There are some tools out there that we've used for financial analysis. In the end, though, there's always a role for a human to play, because a human, it's the classic dichotomy between, let's say, a more senior person and a more junior person. A more senior person should be able to do anything that they're asking a more junior person to do, because they'll need to be able to guide that more junior person, and they'll also need to be able to check the quality of work that junior person is delivering. So same thing with AI. You can now use that Claude plugin for Excel, or even OpenAI has some similar tools. You can use those plugins, but you still have to be able to validate and verify the work. So it's been helping. Some of those AI tools have been helpful in financial analysis and kind of market analysis and market research. We've also been experimenting with using the AI tools with creating parts of our offering documents, the information memorandum and the financial model to an extent. I'd say that the quality of that work is still relatively low, and maybe it could be user error. Maybe it depends kind of on the prompts that we're submitting. There's one company in particular that we've been a big fan of, which is deliverables.ai. They are building a purpose-built solution for investment bankers and private equity funds to use in building out these information memorandums. And it's a paid tool, but it's we know the founding team through some prior transactions, and we've been really impressed by the quality of their output today, and things kind of are only getting better. So I'd say right now we're experimenting with different AI tools, primarily using it to aid in our research and kind of financial modeling efforts. And then we'll hopefully soon be adopting a little bit more heavily in creating the offering documents.
That's amazing. Like whenever I go and talk to the bankers, like AI is something. So I spoke to someone who is like 35 years into investment banking. So he was talking to me about how he started using floppy disk and CD for transferring the data to now to now using AI. So that is something which is like growing also very fast. So you joined investment bank, you become an investment banker as an associate, and now you're a partner at the firm. So
that's right.
What is that one piece of advice which you have to give to someone who is just starting or career in their career into the investment banking world?
There are a couple of things, and frankly, when I first started out, there were, again, some mentors, some senior folks that I had reached out to that, despite their, all of their other commitments, they were always carved out some time to talk with me. I tried to pay it forward, and I tried to do the same. So we get contacted sometimes by younger folks, more junior people trying to, get a foot into the industry, and I always try to carve out a little bit of time to at least talk with them, give them some guidance. I'd say there are kind of two things. The first is that, yes, there's noise today that AI can replace a lot of the junior associates' work, and there won't be a need for that junior person anymore. I think a lot of those worries are overblown, and yes, though that risk may exist, I think a junior person can defend themselves, make themselves a little bit more kind of strengthen their competitive position, so to speak, if they focus on still building out that same toolkit that has always been required. The quantitative side is, table stakes. You have to have that in the industry. What's harder to develop, and will be especially harder for an AI tool to do, is the human side of kind of the selling. So I've actually been recommending that folks evaluate and maybe take some sales training classes, and that's, I think it will take some time for people to feel comfortable negotiating with an AI voice on the phone and kind of interacting with them, talking about a potential transaction. I still think that there's going to be a role for a human to play there for a long time. And especially when, at my level, my partner and I spend a lot of time reaching out to prospective clients. And same thing, it will take, I think, a while for a prospective client to feel comfortable talking with, an AI bot on the phone, and then feeling comfortable hiring that firm as their M&A advisor. So that sales training, it'll be helpful not only in investment banking, it'll be helpful just on their personal side, because I think, you may be talking with your partner at home about where to go for dinner. And same thing, there's an element of sales there. You may want some Italian food, and she or he may want something else. So that sales training, I think, is just life skill. And that actually leads me to my second suggestion, which is that the more junior folks, they should focus instead, they may want to have access to the CEO and to kind of the senior leaders immediately from day one, and it's good to have that ambition. But I think it's more important for when a person is just starting out in their career to focus on building out that toolkit. The social side, the salesmanship or the sales training, that's one part of it. The quantitative side is another. They should really focus on doing whatever they can to build up those tools, those skills that will help them not only in investment banking, but then can carry and transfer to other industries as well. I think the analyst training programs that some of the big bulge bracket banks still offer are an incredible opportunity for somebody, even if they don't plan on working at that firm forever. It's something that you could take those skills elsewhere. The quantitative skills, the qualitative skills, the presentation skills, so I'd say those are kind of my two recommendations for folks just starting out. And the other thing I add too is once you have that toolkit, if you then now add to that toolkit your AI skills or your skills in being able to direct some AI agents, it makes you even more defensible, because the partner doesn't want to be the one typing out all the prompts to the AI agent, even if the AI agent can do all the work. They want to be able to call somebody on their team to say, hey, can you deliver that report tonight? And that person can then, instead of working till 3 or 4 a.m. in the morning, that person can go home, write a couple of prompts, and have the AI agent do that work and be able to deliver something that satisfies the partner's needs within an hour or two, instead of working all night on it.
That's great. It's like we have to educate, upgrade ourselves, and evolve ourselves, and then use AI also to improve 100%. The entire ecosystem.
100%. I think if a person doesn't at least experiment with AI today, they're going to make themselves obsolete very, very quickly.
So that's great advice also, Michael, from your side. So with that, like, my questions are done. So it was great chatting with you. Thanks for taking your time out and spending like 30 minutes with us and sharing your ideas, sharing your advice also with all of us today. So thanks a lot, Michael.
It's my pleasure. Thank you.